Well, after seeing over 45% gains in the last 10 sessions, WTI futures falter on the opening. It does appear that geopolitical events continue to take center stage, however, perhaps offset a little bit by the news flow we saw from Libya this morning, announcing that they're going to begin production on two of their bigger oil fields, and also the improved prospects of the U.S. potentially lifting sanctions over Venezuelan oil. Also, news flow from OPEC General Secretary citing that there is no physical shortage of oil despite the price that we're seeing today. We get into the bulk of our session in the U.S., and the volatility continued and the price action continued to probe the downside despite a pretty bullish EIA report. Inventories fell 600,000 more than expected. Distillates hit a 7.25-year low, missed expectations as well. Gasoline stockpiles, though, they did fall 800,000 less than expected. Cushing stocks hit a 3.5-year low, and production for last week ending was unchanged at 11.6 million barrels a day. Some traders think that perhaps geopolitical events are starting to get compartmentalized and oil starting to follow other asset classes. We see stocks trying to rally, yields are higher, dollar is actually lower. Lastly, looking at options, I look at CME Group CVOL. April options still trading in a 90th percentile, either on a 1 month or 3 month basis. At the money, vol is actually slightly lower on the day, although skew is higher. Both the up variance and down variance are lower, but the put variance is down a lot more than the call variance, and that pushes skew higher. Option volume very strong. On the call side, centered between the 120, 121 strike. Put side spread out a lot more, 118 half put down to the 115 strike. Lastly, I look at CME Group E-micro mini futures volume very heavy today. Yesterday, we saw a posted volume of 279,510 with an open interest of 29,423.